Hi there everyone, welcome to the weekly general update for the 11th and 12th of February, and we've had a pretty fascinating week again in global markets. And on a bigger picture view for the next 3 months through till May, I'm really pretty positive and pretty excited by the possibilities. I think clearly the market trend will remain up, although we will get corrections along the way, and the further the market goes without those natural little corrections, then the more volatile conditions will be. But look, I think we're in for a pretty positive period. But just at the moment, we are poised for a correction, as we have been for some weeks, and it's typical that the nature of markets at tops is much different to at the bottoms. At the bottoms, you tend to get a bit of a sharp turnaround. Markets get sold off on a panic to unrealistically low levels, and then they snap back because people perceive value. Topping process is completely different. You've got a whole different set of psychologies in operation, and as a consequence, often you see tops may even form two or three or sometimes even four little minor tops before the decline really gets underway. And I think that's the process we're in now, and you've just got to be a little bit more careful, lower activity, lower exposure during these periods when markets are topping, and wait for the opportunity to buy in when we get a bit of a sharp sell down. So let's have a look at just a reminder of the licensing and general advice information, the nature of everything that we do here. So a bit of a summary of the action for the week. The S&P basically just lost 1 point for the week, and that all occurred on Friday, which was really the first negative finish that we've seen in quite some time. With the price did bounce off the lows, but closed closer to the lows than what we've seen for a while. So as I said, the topping process is very rarely one day. It's a process, and it's a process that often takes quite a few weeks, and we've been in that for some time. Now, if we've topped, and I'm not saying yet that we necessarily have, I've had a target of 1365 for about a month or so, but if we've topped, as we did the other day at 1354, then my downside targets are 1308, 1280 or 1256. I wouldn't place a high probability on the third one. I think it's 1308 or 1280, which is probably somewhere between about a 3 to 5% retracement, which really is pretty mild. After that, once that's completed, I really think we're going to have a strong push up in the US stock market, and that'll take everything else with it, with an upside target of around 1440 still being the probability. Now the ASX index lost 6 points on the week, so roughly similar to the US, but overall it continues to struggle compared to overseas markets. And I guess part of that is because our larger stocks, which really need the overseas money to drive them, aren't as attractive because of the strength of the Australian dollar. So overseas investors looking at buying into our banks or BHP, etc., are certainly wary because of the Aussie dollar. Yes, there's some good yields on offer against the very low yields overseas, but certainly that Aussie dollar effect, I think, is having some impact. The small caps, particularly in the resources area, are going well, and we've seen some pretty good rises amongst the established profitable businesses. We've seen rises from 10 to 25% over the last 2 weeks. Some of the really small speculative stocks have bounced very hard. We've seen 100% gains in some of the small speculative end, and it's just in the last few days that area starting to look pretty frothy to me. I do scans of volatility breakouts every day, and I'm seeing many more stocks coming up on those scans, and so I just think a correction would be really good for the market. The Shanghai index is confirming the global uptrend. Excuse me, and it's close to short-term resistance, but the Shanghai index is one that's pretty hard to track actually. Now, the US dollar index, and we'll have a look at all these charts in just a minute. The US government has got a long-standing plan to weaken the dollar, despite the fact that they say they're not. Clearly, what they're doing is different from what they're saying. So the overall direction on the US dollar is down, but it's made more difficult because everybody else wants a weak currency as well. There's Japan and China and Europe, and no one wants a strong currency because they all want to have the ability to stimulate their economy through exports. So it's a fascinating tussle that's going to continue to play out. The US dollar index has just done a 50% retracement and is starting to turn back up, which is pretty normal. I think this is just a part of two steps down, one step back in the overall decline. I'm looking at upside targets, maybe 79.50 to 80.50, and a rally in the US dollar is certainly going to be consistent with the S&P correcting back as well. Gold was down $9 on the week. We had just another mild pullback last week. We touched 1704, which is the first Fibonacci level. 1670 is still a possibility before we move higher. So I'm pretty comfortable and clear on where gold is going. It's just the exact reversal points are obviously impossible to know in advance, but we've already touched 1704, so it's possible that was the low for this little correction, because we did get a fairly strong rebound on Friday night. But 1670 still a possibility. Silver also flat on the week, almost touched $35, which is the resistance area that I had. It got within about 15 cents of that. So I'm looking for some major buying opportunities around 31.40 or 30.50. I think down at those levels would be very good buying silver for the medium term. Then I'm looking for a breakout above 35 and a run towards $40. Copper clearly back in uptrend as well, but for the second week in a row it was flat, but remains close to $4. So copper still looking pretty solid. Just some general comment. The main stock trends obviously are up, and I think that is likely to last until May, which tends to be a seasonally weaker time of the year. So that means we've got another 2.5 to 3 months of higher trending markets, with probably some sharpish little corrections along the way. And to me, this is, particularly the last few weeks, has just been fairly typical of this climbing the wall of worry kind of action that occurs when markets are in uptrend. Now the VIX index is poised for a bit of a breakout as well. It's gone down a long way. It's way oversold. So a turn back up in the VIX, which we saw, I think, the start of on Friday night. Combined with a turn up in the dollar equals commodities down and stocks down, so it all kind of makes sense at the moment. Commodity prices, precious metals, despite the rise in gold and silver off their lows over the last few months, they're still really trading near the lows of their historical, what I'll call relative ranges. In other words, if you look at the position of the price relative to their moving averages, they're really still trading near the historical lows, so there's still plenty more upside in precious metals. Copper is still not overvalued despite the rise that we've seen in recent months. And when it comes to oil, look, frankly, there's a lot of discussion at the moment about what Iran's doing, and will oil go to $200 a barrel, or will it go down to 85? Frankly, I have no opinion on oil. I just find oil too hard to pick. So let's have a look at the charts and put a bit more substance to this. So first of all, we'll start with the S&P index. And you can see, I hope this chart's not too complicated, but you can see I've got a retracement scale on here, assuming that 1354 was the high. That gives us retracements to 1308 or 1280, and I would be surprised if it went much below that. You can see on the RSI it's been significantly overbought. It's done that twice now, so again typical of a topping pattern. And if this plays out exactly as normal, which markets rarely do, but to give you an idea, we've had a little top here on the 26th of January. We've gone up, formed another high on the 9th of February. If we came down and then another little rise to form another little peak, maybe sometime over the next few days, but lower than this 9th of February peak, then that would be a pretty perfect setup, and then I could see a bit of a mildish decline to those levels that I indicated before. But you can see that the price action has clearly been sustained above the 150-day moving average now for some time. So I think we've clearly got an uptrend on our hands now. Let's just have a look at the VIX index. And we'll just pan back here and have a wider look so you can see normally when markets are very, very quiet, they're down here around the 15 mark, and then they tend to spike up during periods of uncertainty in the market. We had this in March of last year. We then had very substantial volatility through August, which was really in the significant correction that we had last year. So you can see the volatility index stayed up above 30, which is really indicating a lot of fear in the market. Stayed there for quite some time, and then it was really around about November when things started to clarify a little bit. The ECB basically started making some positive noises about money printing, and the VIX came right down, indicating that people weren't very fearful at all anymore. You can see that we've come back down to pretty low levels. We've started to form a bit of a base here. We got down to way oversold, and one thing that happens in markets is that they do always rebound to a state of more normal operation. And you can see on Friday we did get quite a spike in the VIX, got back up to 21 before it eased back down again, so we may just get a bit more bumping around down here. But look, I really would expect to see a little bit of a rise in the VIX, maybe to the mid-20s or something of that nature. Let's have a look at the US dollar index. So you can see we had a great rise. We've retraced now almost 50% of that rise, pretty close to it, just basically within 0.1. So it's quite likely now that we'll get a little bit of a bounce up. So I'm looking at a bounce up to, let's just put a scale on this. So just have a look where we might get a bit of a bounce to. So I'm looking at 79.5 to 80 on the dollar index is probably the likely area that it will bounce to. You can see that the downward momentum has started to wane, and the MACD starting to turn. So I think we'll see the US dollar probably higher over the very short term, which will put some pressure on stock markets. Now let's have a look at gold and silver. First of all, gold, if 1762 was the peak, then I'm looking for retracements to 1705 or 1671. We did get down to 1704 on Friday night, so it's possible that that's it. But if you look at the momentum indicators, they're really only just starting to turn down now. So I'm a bit 50-50 on where the bottom is in gold, but I think I would prefer to see 1670. I'd feel much more comfortable buying gold down at 1670. Let's have a look at silver. It's likely that we topped out here at 34.80 odd, because it was right up under the 150-day moving average. So we've got downside targets. 31.40 or 30.50 would be a partial retracement of that rise that we've just seen. Now the other interesting indices that I look at are the gold producers in the States. There's two indexes. One's called the GDX, which is the Major Gold Miners Index, which is mostly American gold majors, but also some of the other global majors such as Newcrest. And you can see that despite the very, very strong rise in gold, that the gold miners still really haven't joined in yet, certainly not the majors, which explains why Newcrest really hasn't gone anywhere at this stage. And you can see the 150-day moving average has just been tracking flat for quite some time, so this index has really done very little for quite some time. Now let's just have a look at the junior miners, because certainly in Australia the junior gold miners, some of them anyway, have been doing extremely well. You can see the junior gold miners also, it's not a dramatic decline, but it's just not able to sustain any real momentum. So that's what we're seeing in the States, but then again this index covers about 1,000 precious metals stocks, juniors. Whereas in Australia I really focus on a handful of about the best 10 producers that I've identified, and I can tell you that the charts of some of those look considerably more positive than this one does. So certainly we've got some good trading opportunities in the Aussie market. So just finally, we'll take a look at the Aussie market, and it's really not done a great deal. It's just underperformed the US. You can see we're still caught in this trading range that we've been in now for some time. So if you're wondering why some of the major stocks really aren't going anywhere much, this is why. It's just basically locked into this trading range, which is getting tighter and tighter. So that's it for this week. Just to reiterate, I really think we're going to get a week or two of softer action, and that'll just set up really a great run then, I believe, probably extending into May. And then I'd be looking at probably taking a fair amount of money off the table at that stage, and probably looking at establishing some short positions. So that's it for this week. Talk to you again next weekend. Cheers.